Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to do the consequences of taking a quarter off, part 2. And it starts with this premise that a lot can go wrong when you take a quarter off. And the story here is the $100 million data center CEO. There once was a prominent data center company that had no inventory of space and power. A prominent customer came to them for space and power, and it was turned down. A small teetering data center on the verge of bankruptcy took that business, and the CEO made $100 million. As a public company executive, are you in the business of unlocking value for your shareholders or the competition? It should be your own shareholders. So let's look at Transocean as a real-life example. And it starts with golden metrics. There's 2 golden metrics, the idea of backlog and deleveraging. So in the fourth quarter, Transocean had a good year, but it all fell apart in the fourth quarter. And it starts with backlog. Valaris, the main competitor, added $1.4 billion in backlog, whereas Transocean only added $300 million. Now, where the problem comes in is on the deleveraging golden metric, which was manufactured by Transocean. They have $7 billion in debt, they need to start deleveraging, and they need to start activating cold stacked assets. So what is the crux of the problem here? It revolves around bankruptcy. Valaris, a competitor, declared bankruptcy in 2020, emerged in 2021. They eliminated $7 billion in debt, and therefore they can take lowball business and be profitable. Conversely, Transocean still has $7 billion in debt. Their strategy is we're going to wait to start activating cold stacked assets for surge pricing and to set pricing. The problem is the company has also said we're going to delever, and it's creating this waiting for a Godot moment for investors. The equity trades as if deleveraging will never happen because it's an eternity away. The bonds trade as if deleveraging is a slam dunk. And this is the problem. When you operate in a competitive environment, management cannot operate in a vacuum. They need to look at competitor strategies and inform their own strategies based on the competition. And a Hall of Fame management team in this scenario would understand that there is a balance between taking any business, waiting for surge pricing, and the best executing management team would say, look, if there is a good enough price to start activating these cold stacked assets and begin deleveraging today versus 3 years from now, that's how you get a home run in terms of unlocking shareholder value. Thanks for watching. Always here to help you with your capital markets, investor relations, and corporate finance needs.